we're still on the hunt for those hot growth stocks this week. And so I'm bringing some more to you because there's a plenty to choose from that have excellent earnings surprise track records and the stocks are breaking out. But I've chosen a couple of the Magnificent Sevens and some other really red hot retail growth stock names to show you on this video because some of these you may have been watching before, but kind of stopped, especially after 2022. But maybe you should be tuning in once again. So, what are they? Let's dive right in. The first one out of the gate is Tractor Supply. It's one of the big winners always on the growth side of retail. But as you can see from this chart, it's run into a little bit more troubles here after the pandemic ended. And we had two misses there in 2023, but it seemingly has resumed its earnings beats again because it did beat last quarter. This stock has not busted out to new highs and has been in this kind of narrow 2+ year channel, which we've seen a lot of stocks do, but it has had the nice rally off those October lows. And it looks like it wants to kind of challenge and get back to those highs. Maybe another earnings beat and a strong guide will provide another breakout here, but investors in Tractor Supply are kind of just waiting to see. The valuation of Tractor Supply has gotten more attractive over the last 2 weeks as the shares have kind of just stalled out. It has a PE of 22 now and a price to sales ratio of just 1.7. So both of those are more affordable, you might say, or in more of the value-ish type realm than what it was trading at back here in 2021 when it hit new all-time highs. So this is definitely one to watch on the retail side and the growth side this week. And I'm going to be tuning in for sure to see what is going on the rural economy because Tractor Supply stores are outside of the major urban centers. So that's Tractor Supply, ticker TSCO. And then we're going to turn it back over to the Magnificent Seven. We can't get enough of those. And this week is the big week for the Mag 7. Apple is another one that's reporting this week, only has that one miss in 2023. That is a rare miss, as you can see, but the shares have been busting out once again to new all-time highs. Price to sales ratio on Apple now is at 7.8 with a PE of 29. So it hasn't been cheap for a long time, but, investors are still hanging in there, obviously, and the stock continues to hit new highs. So how high can it go? Can it get a price to sales ratio over 10 for Apple, like where Microsoft is now? I don't know. I'm a little dubious on that. That feels a little too hot to me, but we will see. With Apple, I never count it out. Then we're going to talk about another Mag 7, Amazon. This has been a wilder ride than what we've seen with some of the others. As you can see, huge sell-off back to the pandemic lows in 2022, but a huge rally afterwards. Now, I own this in my own personal portfolio, so I'm kind of used to the wild ride. But even for me, it's been quite whiplash with this new rally. It's at 52-week highs, but as you can see, not yet back to the all-times. They've done a lot of cost cutting. They've, cut a lot of employees and laid off a lot of people to get those costs down. And it does seem to be paying off. What's going to be happening with AWS, though? That's always a driver. They're building big data centers around the country. They just announced a $10 billion 2 data centers in Mississippi. That's a huge outlay. So what else are we going to see? What are we going to see with Whole Foods and with the retail side? That is always one to watch. Valuations, it's not super expensive here with the forward PE of 43 because back in 2021, it was trading at like 63 times. So it's at 43 times now with a price to sale ratio of about 3. So a little bit cheaper than some of the other Mag 7s on the price to sales ratio side. So this is definitely one everyone's going to be watching this week. And we're staying on the Mag 7 side with Meta Platforms busting out to new all-time highs. Once again, look at that rally. Very stunning turnaround from those under the pandemic lows in 2022. The stock was mostly left for dead at the end of 2022. Massive rally. What about valuations? PE of 22, price to sales ratio of 8. So cheaper on the PE side, price to sales ratio, not so much. What are investors willing to continue to pay for Meta Platforms? Looks like they're willing to pay a lot, but it has produced 4 big beats in a row, and we'll see if it can continue with that streak. Then we're going to wrap it up with one of my favorite value stocks. It's always flown under the radar. It really shouldn't, because look at this chart. Only the one miss there in 2021, and that is when it was reporting it just had simply too much inventory. When the supply chain started to fix itself, a lot of the boats got stuck over in China and on its way over. So they ordered too much inventory there at the end of 2021. They had to discount it to get rid of it in 2022, but that's long in the rear view mirror, as you can see. We've had quite an earnings streak, 8 in a row now, and the last earnings beat was massive here in the last quarter, 54%. Now, some of that was because they decided to do their fall promotions in the prior quarter, and prior years they waited to do the fall promotions a little bit later. So those sales were pulled forward, which they did warn about in their guidance. But the street didn't care. They still think it is going to be a red hot holiday quarter as well. They did have pricing power. They didn't have much inventory. They were able to sell more product at full price. Most likely, we're going to find out this week for sure, but most likely it was a good earnings quarter for Deckers. This is the maker of UGG and Hoka, 2 of the hottest shoe brands out there. So what does their valuations look like? It's much more expensive than it was in 2022 there at the lows there. It was trading around 22 times back then. It's now trading at 32 times with the price to sales ratio of 5.1. So neither thing is cheap, but you're paying for the growth, and the growth is there with UGG and Hoka, but it's only a matter of how much are you willing to pay, right, for that growth. And that's true of all of these 5 stocks this week. The Magnificent Seven, Tractor Supply, and Deckers, they've all got the growth trajectory, but none of them are cheap. And these questions are starting to swirl about valuations once again on some of these growth names. But for now, we're getting on board and we're writing them out, because how could you not with some of these charts? And I'm going to be watching all of these charts plus more all week long, because this is an extremely busy week on the earnings season. So you want to be sure to get all of our charts. You can get them at Zacks.com/YouTube for these videos, and you can get more earnings charts than just these that I'm putting out this week, because I will be tweeting out even more charts. There's a lot of home builders reporting this week, so I'm going to be tweeting out those. I'll also be tweeting out some of these conference calls or information from the press releases and what's going on with earnings. So be sure to follow me on Twitter at Tracy Reinick, just my name, over on Twitter, because you'll get a lot of earnings data over there as well. And throughout earnings season, I'll be bringing you even more charts, because earnings doesn't end this week just because the Magnificent Seven is mostly done. We will have a lot more earnings charts still to come, including some other hot growth names, both in tech and outside of tech, because as Deckers showed this week, there are other stocks busting out other than the Magnificent Seven. So be sure to tune in as I give you all the good earnings charts as we go along this week and next week and in through the rest of February. But I'll be here with all the great charts, and you don't want to miss it. So I'll see you again next week with some more great earnings charts.